Elon Musk puts $44 billion Twitter deal on hold. Only a few weeks ago, a big announcement was made that Elon Musk, tech icon and billionaire, was purchasing Twitter for the not-too-shabby sum of $44 billion. However, just a couple of weeks later, on the 13th of May, Musk shocked Twitter shareholders by sending out a tweet saying that the Twitter deal is currently on hold. What does this mean? Exactly why did Musk put the Twitter deal on hold? Does he intend to back out of the deal altogether? And is this a strategy to drive the price down? Let's find out in today's video. But before we get started, welcome to Elon Musk Times, the place to be for news about Elon Musk, Tesla, SpaceX, and, in this case, the already famous Twitter deal. Don't forget to subscribe to our channel and make sure to hit the bell icon to never miss a video. Now, let's dive right in. So, back on the 25th of April, Musk and Twitter came to the agreement that Elon would buy Twitter for roughly $44 billion. The deal instantly became one of the most notable corporate takeovers in the history of contemporary business, due to the fact that Elon is planning on turning Twitter into a privately owned company. Then, things took an even stranger turn on the 13th of May. First of all, Musk himself sent out a tweet containing the following message: Twitter deal temporarily on hold pending details supporting calculation that spam and fake accounts do indeed represent less than 5% of users. Apparently, Musk was suddenly concerned with the amount of fake accounts on the Twitter platform. After that, about 2 hours later, Musk sent out another tweet stating that he still committed himself to the acquisition of Twitter. However, he did not provide any further information on the matter. However, these two tweets alone, which appeared to be in conflict with one another, caused many people to speculate that Elon Musk was either getting cold feet or was attempting to drive down the acquisition price. At any rate, as a result, Twitter's stock price dropped. Following Elon's tweet, the share price of Twitter dropped by a whopping 10% during the morning trading session in New York on May 13th. So, to recap, Elon and Twitter strike a deal, Elon starts to question the amount of fake accounts on Twitter, tweets about putting the deal on hold, and Twitter's stock price drops significantly. But what is the deal with these fake Twitter accounts, and why does Elon care so much about them? Well, let's find out a little bit about the infamous Twitter spam accounts first. Twitter has been accused for a very long time of not doing enough to combat automated accounts and false accounts that post content. The company has struggled for a long time with spam and bots, despite the fact that it has few limits on who can sign up for an account. On the other hand, it has proven challenging to put a precise number on the severity of the problem. Twitter estimated more than 2 weeks ago that during the first 3 months of this year, fake accounts accounted for less than 5% of the platform's daily active users. This information was included in a filing, and Twitter made it clear that the numbers were derived from estimates and that the actual totals may be higher. Also worth to note, these recent assertions were identical to what the company had presented in earlier disclosures. Nothing new there. So why does the amount of fake accounts matter anyway? Well, according to Susanna Streeter, an analyst at Hargreaves Lansdown, the number of spam bots, or fake accounts, that are currently active on Twitter is actually one of the most important statistics about the platform from a buyer's standpoint. If the number of fake accounts is significantly higher than anticipated, it could hinder Musk's ability to grow advertising revenue should he take over the company. Also, Musk seems to really not like the fake accounts. Musk has already made it clear that if he takes over Twitter, he plans to completely get rid of the fake accounts, even going as far as to authenticate real humans in order to improve Twitter's user experience. Ahead of his assumption of leadership responsibilities, he had indicated that one of his primary goals would be to clean up the platform by eliminating spam, fraudulent accounts, and bots. This would mean getting rid of a percentage of Twitter accounts. So, in other words, while Musk might be willing to pay $44 billion for a social network where active daily, actually profitable users make up 95% of the accounts, he may not be so willing to pay the same sum for a platform where profitable users only make up, say, 80% of all accounts. Okay, kind of makes sense? However, another report has popped up stating that the number of fake Twitter accounts might actually be less than 5%. Enter the Reuters report. So in these kind of company takeovers, extensive research into the company up for sale is usually carried out before the merger and acquisition deals are made public. In this particular instance, however, Musk stated that he has put a $44 billion deal on hold, awaiting new reports. However, another report on the amount of fake Twitter accounts has already been published by Reuters, and it is based on Twitter's regulatory filing rather than on Twitter's private internal data. The Reuters report is actually a positive report for Twitter because, contrary to what many people anticipate or feel, the report found that fewer than 5% of Twitter users are fake accounts. Good for Twitter, right? So, why would Elon need yet another third report on the matter? Could it be that he is trying to get out of the deal altogether? Could he just be getting cold feet? Since Twitter had already disclosed numbers about the fake accounts before Musk made his proposal, and since two reports state that fake accounts make up 5% or less of Twitter accounts, some people have interpreted Musk's recent tweets about putting the Twitter deal on hold as a strategy to drive down the price of the acquisition or as a justification for eventually pulling out of the deal entirely. Why? Well, even for one of the richest guys on the planet, money could be an issue. As we explained before, the stock price of Twitter has dropped dramatically since news came out that Elon Musk plans on buying Twitter. Stock price reached a low point of $35 per share on the 24th of May, which is almost $20 less than the $54.20 per share that Musk agreed to pay last month. That's a big difference. On top of that, Musk's Tesla isn't doing great at the stock market either. In fact, it seems to be that the Twitter deal has caused Tesla stock to suffer significant losses on the stock market, thereby directly reducing Musk's personal wealth. Just a day after Twitter's board approved Musk's $44 billion acquisition of the platform, Tesla stock dropped by more than 12%, giving a very strong impression that investors are concerned with the deal between Musk and Twitter. Despite the fact that Musk has not clarified what he means by putting the agreement on hold, his tweet sparked speculation that the business arrangement between Musk and Twitter has not yet been finalized. So Elon might still have an opportunity to back out of it. Musk's tweets, combined with the effect the announcement of the Twitter deal had on both Tesla and Twitter stock prices, certainly has caused a lot of speculation on whether or not Musk will actually go ahead and purchase Twitter. At any rate, Musk's tweets about putting the Twitter deal on hold certainly had an interesting effect on both Tesla and Twitter stock prices, something that didn't go unnoticed and reminded some people of a little incident that took place a few years before. Back in 2018, Tesla stock shot up by 6% after Musk falsely tweeted that he had secured funding to take Tesla private. As a result, Musk was charged with securities fraud by the Securities and Exchange Commission, and Musk and Tesla were fined $40 million as a result of Musk's tweet. On top of that, Musk is facing a shareholder lawsuit over the tweet. Yikes! Mark Leaf, a former SEC lawyer, had the following to say on the matter. If I were his lawyer, I'd be scrambling to figure out what the implication of all of this is under federal security law. Leaf believes Musk should be concerned about how securities regulators might react to tweets that have direct implications for the company's acquisition. He also noted it was unclear whether Musk's tweets about his plans to take the social media company private would necessitate an updated filing with regulators, as they are considered material information to investors. Wow, a lot to unpack here. On the one hand, Musk might be completely right in putting the Twitter deal on hold and awaiting further reports on Twitter's fake accounts before actually spending $44 billion on the platform. On the other hand, his tweets have had an interesting effect on stock prices before, so in theory, his tweets could indeed be part of a strategy to get a better price for the social network. What do you guys have to say about this? Do you think Elon made a smart move putting the Twitter deal on hold until new, possibly more accurate reports on the Twitter spam accounts have come in? Or do you think he played Twitter by driving the initial selling price down? Let us know in the comments below, or just leave a fist bump if you like the video. And of course, subscribe to our channel and hit the bell icon so you won't miss the next video. Have the best day, and we'll see you in the next one.